positive outlook amid concerns over rampant spending on artificial intelligence. Well, for more, let's speak with Austin Lyons, a senior analyst at Creative Strategies. Austin, what's your take then? We just heard a very sort of pessimistic view from Ed about SpaceX when it comes to AI. AMD, though, a very different animal. How do you see them faring?
Yeah, and I am an AI bull, and so I think that obviously there's opportunities for NVIDIA to sell into AI, as we've seen for the last couple of years, and AMD is catching up as a credible second source, an alternative to NVIDIA. Now, AMD's story, of course, everyone's focusing on the AI angle, which is about their GPU line. But they've been historically a CPU company, and their data center CPUs have been doing really well. And that's really what propelled them to their results this quarter, selling a lot of CPUs for agentic AI, and then just generally selling server CPUs pretty well.
Yeah, so what do you make of then the fact that they've sort of had a beat and a raise this quarter, but at the same time, just as we've seen with SpaceX, their stock is falling?
Yeah, there was a run up in their stock price before the earnings for basically 48 hours. And so I think there was a little bit of people getting in ahead of earnings, maybe hoping that it would pop. There'd be some sort of big announcement or something unexpected. But expectations were in line. And of course, they were favorable. They beat expectations. And even Lisa Su, the CEO, said to an analyst on the call, like, hey, you're modeling our opportunity a little bit conservatively. We expect to be above that. So all signs point to being a healthy business and growing. I just think investors were maybe getting a little bit ahead of themselves.
Yeah, and do you think how do you see AMD going forward then? I mean, is it becoming more of an AI infrastructure business than it is a legacy PC maker?
Yes, definitely. And that was an interesting thing from their earnings. Now they are, I believe it's up to data center alone is up to 58% of the company. So that would be their GPU and their CPUs, everything related to data center. And so this is obviously a very exciting trend for AMD, having been historically consumer PCs and consumer graphics cards. And now the majority is coming from data center, and it will continue to trend that way.
And you think the CapEx spend will continue?
Yes. So there was a big surprise this quarter where their CapEx spend was about $800 million, and I think people were expecting it to be $200-300 million. Now, in the grand scheme of things, we're talking about hyperscalers who are investing $100 billion, and so it's not that big. And I think the way you got to think about AMD is they're investing ahead of revenue, yes, but they're investing in building out these rack scale GPUs that they'll be shipping end of Q3 and into Q4. And so the time to return on that investment is very short. They're literally just investing ahead of standing up and getting these with their OEM partners, getting them built and sold to customers. So feels like a pretty safe investment. Also, I know they're investing in some of their own compute infrastructure to support their own company and support their Anthropic partnership. So feels like very reasonable investments.
Austin, thanks very much for your thoughts as always. Austin Lyons, Senior Analyst at Creative Strategies.